Hi, everyone. I'm Rosemary Miller here with Stephen Ehrlich, the Director of Digital Assets here at Forbes, here to give us a 2023 wrap up of crypto and things we can look out for in 2024. Thank you so much for joining me today, Steve.
Thanks, Rosemary.
Absolutely. So, Steve, with Sam Bankman-Fried in jail and Changpeng Zhao of Binance, he's ousted now. What can we expect in 2024?
It's an interesting question because I think if you ask a lot of enthusiasts in the industry, they would like us to kind of forget that Sam Bankman-Fried FTX sort of ever happened. The month-long trial in October, in which he was convicted on multiple counts of fraud, was a cruel reminder to some of them. But they're anxious now to kind of turn the page. And then again with Binance, their CEO Changpeng Zhao, as you said, he pled guilty. The company pled guilty to violating various statutes of the Bank Secrecy Act. They're going to be paying a record $4.3 billion fine to a suite of U.S. regulatory agencies, and it appears that CZ, who Zhao is more commonly known as, is going to spend perhaps up to 18 months in prison himself. That's a far cry from the 100-plus year sentence that Sam Bankman-Fried might be looking at. But it appears that at least for 18 months, those two individuals will be very much out of sight, and again, for crypto enthusiasts, hopefully out of mind. What does that mean for the industry as a whole? It's difficult to say. There is a broad hope or expectation that sort of now that these sort of Wild West rogue elements are gone, that like the regulatory compliant cavalry is going to ride in. They point to the expected approval of multiple spot Bitcoin ETFs, which we've spoken about multiple times, Rosemary. That could happen as soon as January 10th, where blue chip firms like BlackRock, Fidelity, Invesco, VanEck, billions and trillions in assets will be able to offer an easy on-ramp for anyone to get exposure to crypto from their brokerage account. But
And
that's
let me
just
stop you right there, Steve.
Mhm.
So that's a lot of traditional finance you just named. Is
Mhm.
crypto kind of leaning on traditional finance to stand these days?
A little bit, and I'm kind of glad you went into that. I actually just finished working on a report that I'm going to send out to subscribers of my research service for Crypto Asset and Blockchain Advisor. And one of the things that I looked at is it's this metric known as market dominance. The crypto market cap, um, basically looking at the total value of the crypto market cap, which at least as of today is about 1.5, 1.6 trillion dollars. Of that, Bitcoin and Ether is at the highest level that it has been basically since 2017, right before the ICO craze started out. And what that basically means is that there's a lot of focus, especially for this coming year, on Bitcoin and Ether and some of the more side projects like ICOs and NFTs and DeFi and so on and so forth. They're not going away, but they're not nearly as important as they were perhaps a couple of years ago or during the COVID-driven stimulus where everything went up across all asset classes. So one of the things that I'm really looking forward to, or really looking to watch going into 2024, is really kind of like uh, what does the approval of spot Bitcoin ETFs mean for the development of the Bitcoin ecosystem as a whole? There is sort of this perception out there that Bitcoin is this like staid um, uh, payment system without a lot of innovation, without a lot of functionality, and that really is not the case. There are multiple networks being built on top of Bitcoin to help make payments faster and cheaper than just on the Bitcoin network itself. There are projects such as Stacks that are trying to bring smart contract composability onto Bitcoin. I know that's a mouthful, but what that kind of means is that some of the projects, decentralized applications that we see on Ethereum and Solana and other blockchains themselves, might have a way to be put on top of Bitcoin. So putting that square peg into a round hole, trying to find a way to make that fit. There are now NFTs on top of Bitcoin, which is not something that many people thought was possible years ago. So there's a lot of other elements to Bitcoin that I'm anticipating are going to sort of sprout up, especially as more regulated institutions go into Bitcoin. Related to your other question though about just like, are we going to ride the coattails of Wall Street and what does all that mean for Bitcoin and crypto in general? I think there's a little bit of that, and I think, Rosemary, we spoke about that to some degree when we talked about tokenization a few weeks ago. But I also believe that aside from these ETFs, the other real thing that people want to see is clarity, regulatory clarity in the U.S. And that's in the form of legislation coming out of Congress that kind of helps set the rules of the road for crypto projects. In particular, determining which federal regulator, the CFTC or SEC, has primacy over digital assets. I don't think that's going to happen this year. I've spoken with numerous people in Congress and congressional watchers across both sides of the aisle, and I mean, aside from the fact that Congress is having trouble passing anything right now, crypto seems to be a non-starter, if nothing else, because the chair of the Senate Banking Committee, Sherrod Brown, just does not seem to be interested in doing anything related to crypto. So, my long answer short, I'm anticipating a big surge in Bitcoin, a follow-on surge in Ethereum, and just a lot of activity around these ecosystems to try to add more functionality.
And once upon a time, we all heard about Web3 nonstop. This was mainly when NFTs were booming. So are we going to start hearing more about Web3, blockchain, NFTs? Is that coming up in 2024?
So I'm glad you brought this up, because Web3 can mean a lot of different things to a lot of different people, kind of like a Rorschach's test, like crypto in general. I think of it as in a couple of ways. I mean, for one, Web3 is very commonly thought of as this immersive, interactive internet, virtual reality, metaverse, what have you. Another definition sort of kind of takes an extension from Web2 and creating a more, a more equitable internet where people have more control over their personal data, their ownership over digital assets, and they are the ones that can kind of dictate who has access to what, for when, and under what conditions. And Web3 in particular, I think, is very much associated with NFTs. And some of that has fallen a little bit out of favor, especially as the bear market really kind of dug its teeth in. NFTs are actually starting to stir to life a little bit just in the last month or two, but they're still well behind Bitcoin, Ether, and some of the other major alternative currencies or alternative cryptos out there like Solana and Avalanche. I do think we're going to see more excitement towards that, especially around gaming, where there seems to be an easy use case, an easy marketing pitch for people to be able to own digital assets, weapons, or clothing, or whatever in games. But I think there's still a big gap that needs to be crossed between sort of like what Web3 might look like at maturity and sort of the embryonic stages in which it resides now.
Well, is there anything else on your radar regarding crypto in 2024 that you believe should be on ours?
So there's two other items that I'm really paying attention to as we move into 2024. One is going to be the fate of the stablecoin industry. As we've spoken about before, Rosemary, the stablecoin industry, or stablecoins, are essentially digital replicas of some underlying asset that reside on top of blockchains, most commonly the US dollar. It's about $130 billion industry right now, and the vast majority of it is dominated by a single company called Tether, whose sort of regulatory track record leaves something to be desired, and that's putting it pretty mildly. They've never been audited, and there's a lot of momentum, especially in Congress and at the Treasury Department, to try to find a way to get more oversight over this company, especially because now that FTX is down, Binance has agreed to a compliance or monitoring agreement for the next 5 years, and likely will become, I think, a shell of what it once was. Tether is sort of seen as the 800-pound gorilla in the room that is mission critical for crypto, but there's still some important questions that need to be asked about that. And sort of the fate of what happens to Tether is going to sort of lean into what happens with privately issued stablecoins in general. Congress right now is working on a bill to sort of figure out whether banks or non-bank regulated, non-bank but still regulated financial entities can issue stablecoins, and how might all of that dovetail with federally issued central bank digital currencies that get sent right from central banks by fiat. So how all that's going to fit, because that will impact certain tokenization projects that regulated companies run on top of blockchain, as well as the fact that stablecoins provide necessary liquidity for crypto trading. So that's one thing. I don't know what's going to happen, but I'm very excited to watch. The other point that I kind of want to is something I think a little bit less on people's radars, but I think it's important. One of the reasons why I think, as much as there was a crackdown in Washington and other capitals surrounding the collapse of FTX and the crypto collapse, it wasn't as bad as perhaps it could have been, was because this industry was still relatively air-gapped from the broader financial community. Yes, stablecoins are a big link. They were then, they're bigger now, but there is a growing trend with MiCA, a landmark piece of legislation in the EU, with a proposed market structure bill here in the US. And I know that there's a lot of exchanges and marketplaces out there that are trying to find a way to let people buy and sell Bitcoin and shares of Apple or any other stock all in one platform, using one as collateral to take out loans for another. And there's nothing wrong with that, but that's going to increase the linkages between crypto and traditional finance. This is a good thing because in one sense, maybe it helps provide like a degree of reliability and acceptability towards this industry. But at the same point, if things go awry, it means that there's going to be a lot more ways for the traditional financial sector to be impacted by what happens in crypto. And that's, I guess, for better or for worse. So I'm really curious to see how this develops and what questions come out from regulators, because as much as many crypto enthusiasts on the Hill in Washington and around the world want to see this happen, there are still important questions that need to be asked.
Thank you so much for joining me today, Steve.
Thanks, Rosemary.